Hi, and welcome to episode 12 of the Just Covered podcast, where we listen to advisors' views and opinions in the intermediary space. Today, we're here at our new office in Cardiff.
And we're joined by Amy Whittingham from St James's Place Protection Planning. So welcome, Amy. Thank you so much for joining us. Amy's going to talk to us today about how she navigates the protection advice from those advisors that refer clients into her and her team. So, Amy, can you tell us a bit about your role and what led you to doing it?
Okay, well, if we start at the beginning, when I was 16 and the careers officer said I should work in the bank and financial services, I went, I'd rather die. Who joins financial services because they dream of doing so? But I did eventually join, firstly in an admin role, then I became a mortgage advisor, and then eventually went into the insurance market. And David Mead and Alex Chianthi, who are the head of protection for Future Proof, they started a company 12 years ago, actually, this week. And I joined them as the first advisor a year later, been there ever since. And then 5 years ago, we were acquired by St James's Place Protection Planning. So there's now two parts of the business. The original Future Proof that has the original clients, they have referrals from all kinds of different advisors. And then St James's Place Protection Planning, which I'm more in, and all the clients are referred via the St James's Place Wealth Management Partners. And I'm a protection advisor, so I advise those clients, and I also manage a team of 6 other advisors.
Oh, so you definitely walk the walk then, because you've
Yes.
been a mortgage advisor, you've gone through that time, and yeah,
Yes.
first employee. That's that's an achievement as well, isn't it? So when I messaged or contacted saying, who can we have as a protection specialist on, and you were one of the first to appear. Your name definitely came up. So obviously, as part of the podcast, we love to hear from advisors about their experience and how they navigate those conversations with clients. So, also when you get those referrals in from other advisors, what's the kind of first step to that, and how does your process look?
Okay, so all of our all of our clients come from the partners. So they're booked in initially. The partner does an online referral. Our admin team calls the clients. We understand you want to speak to a protection advisor. We've been asked by your partner to go through the process with you. So they book an appointment, and then I call the clients at the allotted appointment time. Sometimes we've got quite a lot of the information and the background from the partner, particularly if it's a long-term client. Sometimes they're quite new clients, they'll only have limited information. And then the process is get to know your client, find out their needs, then go through, find out what it is they're looking for, and then present the insurance that we think is most appropriate.
So how do you build that rapport with the client over the phone?
But with most of our advice is done over the phone, although now, since COVID, we do it via Teams, video calls. It's quite easy, I feel, to talk to a client. You just sort of sit back. There's no rush, you do take time to listen to the clients and find out exactly what they need. And then we may need to then have a 2 or even 3-part conversation where we need to go away to find out what products or what policies we think are going to be most appropriate. And then we go through, talk to them. And then if they're happy, we apply and then process the application until it completes.
And in terms of your role then, obviously you're specialising in that space where you're getting referrals in from a range of different kind of advisor or partner
Mm.
backgrounds and advisor backgrounds for those who maybe aren't in the SGP space. Um, when you're looking at that advice process and speaking to them, do you find that your conversation changes depending on whether they've been referred to from a mortgage space or from a wealth space, or does it tend to be the same?
The idea and the basis is the same. And if they've come through on a mortgage basis, then the chances are they're going to be younger or certainly pre-retirement age, and they're going to have very different needs as opposed to someone who wants to look at inheritance tax liabilities. And that's a very specific, we have a team that deals with that. So people are people, they've all got the same issues, but depending on the circumstances and where they are in their life cycle, will have different ideas of what they need.
And so for that younger space, and how do you tackle that conversation and get them to realise the need for protection?
Because the ones I deal with are referred by St James's Place, they've already spoken to an advisor or a partner in some degree. So they're already open to listening to advice. And to be honest, we always say, it may sound a bit glib, but we say treat each client like your family. And I recently had a couple who were buying their first property. They weren't even in it yet. And at the same age as my son. And I treated them the same as if it was my son. So we went through all the needs, and clearly they needed, it was a joint mortgage, married couple. They need life insurance, critical illness cover, full income protection. They're at the start of their careers, not earning huge amounts of money, have no idea of the costs. And the optimum advice would be about £200 a month. Now, if it was my son who's about to buy a house, who has no idea of the costs, would I say spend £200 a month? No. So I said, let's just do what you need now. And then you will review it next year, because your partner will review you each year. And I'll have a word with the partner and say, would you like me to diarise? Are you happy to do so? And then when you're settled, we'll decide what it is, if you've got more money to afford. Because, I don't think anyone ever gets the amount of insurance they truly need, because it would just cost too much. I don't. So it's really getting that sweet spot about what a budget is available, what's affordable, and what's the priority.
So it sounds like the review strategy is really, really key to what you're doing from a business perspective. And I know we talk about that a lot, about putting that into place. How do you ensure that that happens?
Because the partners own the clients and they're not our clients, so we do give them back. But however, we do have quite a good relationship with the partners, and we will say, would you like us to review next year, or are you happy to do so? But we'd also, just out of politeness, talk to the partners. We do get clients come back to us. It could be that a partner in the meantime has employed a protection specialist within their firm. So, and they might say, actually, we'll take it from there. That's fine. But most of the time they say, we're happy to do so.
And when thinking about the sort of breadth of different types of leads that you have, different types of customers, sort of thinking about the wealth space, and I know they're getting introduced, so they might be warmer. Do you find with those you have to delve into to the need more about protecting their health and their wealth, I suppose?
It's an interesting one, because there is a certain level of, can they self-insure? Well, they could do, but wealth, that's very subjective. One person's wealth is another person, well, they're doing all right, but not brilliantly. And that also comes down to the risk cost analysis. We do group cover. And I heard about one company had group income protection. They're quite a big company, quite substantial. I think they had about 800 employees. Last year, they took a board meeting and said, actually, we don't need to pay for this because we've got enough reserves. We can self-insure. Fine, they did that. Since then, a quite a senior member of staff has been taken ill. Potentially, they'll be paying sick pay for 20 years. When they've looked at the cost and went, actually, compare that to what the premiums would have been, would we be better? And that is what you're looking at with the wealth, and particularly again with inheritance tax. There's a different feel when you're looking at family protection. And we all know when people have just had a baby, I've got to look after them. It's from your heart. When it's inheritance tax, it's how much tax do I want to pay, and what am I willing to spend on negating that?
That's an interesting one, isn't it? And the risk, the opportunity cost of doing something about it, as you've seen, and with regards to that grouping protection example you've given, they've seen the negative side of it. I'm just interested to delve a little bit further around that side of risk, because you're dealing with wealth clients quite a lot, I presume. And in the wealth space, we talk a lot around capacity for loss and all that type of thing. Do you apply that sort of strategy from a protection perspective as well? Or do you?
Not quite. I think that people are the same, whether wealthy or not. And it's the same situation, because a classic would be, so you've got often the man who earns the most money, who says, well, why would I need to insure my wife? I'm earning all the money. Well, I've dealt with plenty of claims, and we've been to somebody recently. She had a brain tumor. Thankfully, she's making a full recovery, but not only she won't be able to work for 2 years. It's as simple as that. but her husband's had to take off 6 months to care for her and the children, so there's no money. So he could be earning, 500,000 a year, but if he can't work, then it doesn't really make any
And
difference.
if they've got a wealth portfolio that was there for, I don't know, around the world trip in the future, retirement, whatever it is, they're not thinking of having to delve into that in
Well,
that scenario.
Or they might be, and I soon put that one back when
Right.
you have people who say, well, I don't need it. I've got a year's worth of savings. Okay. If you were ill, do you want to use all that up? Possibly within a year, and you've taken 20 years to build it up. I certainly wouldn't, not if it's really quite a minimal amount to protect it.
We see that in our, excuse me, deadline to breadline stats as well. Because when we do that research, it's quite funny. A lot of customers will say, I'd rather save than spend on an insurance policy. But when we do the maths on those customers and you work out, well, how much do you have to save to achieve that amount of finance being available? It's not achievable for many, or it takes 14, 15 years when you could actually spend less each month on a policy and have access immediately to those funds.
It's
So
exactly that.
yeah, it is interesting. And I found what you said about that every client's this whether they're wealthy or not, I treat them the same. Because what we find when we are educating advisors in our webinars, workshops, sometimes we do a session on belief cycle. And sometimes we'll have advisors, we ask them to say, what's your belief on a wealthy client? What's your belief on buy-to-let landlords? And they'll say, oh, well, wealthy clients are really hard to get to buy into protection. But actually, I love that you're like, well, I treat them the same. Because if they've got an income, or they've got wealth that they want to stay in place, everyone needs it. And
It
it's
is.
interesting.
And I've certainly, as going back to being in the business so long, I have so many claims or come across, and we had one quite recently. He's only in his 30s, self-employed, earns good money, plenty of savings, young family, big mortgage. Took life insurance, cheap as chips, well, when you not. He turned down critical illness cover, but he did go for income protection. But he said, well, I have a year's deferred period because I've got so much savings. Fine. Unfortunately, he has been diagnosed with cancer. Hopefully, and there's every reason he'll make a full recovery, be fine. But strangely, now he's insuring his wife for everything. And it's like, he hopefully will be fine financially, but he will lose his savings. And, he could have been in such a much better situation. And as we know, when you are ill, it's actually expensive to be ill.
It absolutely is, because that's the same scenario that my parents faced. They had life cover, but no critical illness cover, no income protection. So I'm really lucky that when they were critically ill, that life cover was absolutely useless. But they could have actually been in a much stronger position had they, I don't know, maybe met an advisor that they clicked with, or had that in-depth conversation. And it's interesting to think of, we don't get taught it at school. So sometimes you're the
No.
first person to ever mention it. So you get a bit of a warm up from the partner, but you're sometimes maybe the first person that ever really shows them the true risk that they face.
Yeah, Amy, you've got that belief that's built up probably around scenarios that you've already given. So that example in particular, was there a point where you had to be convinced to have that belief? Was there a point where you thought wealth clients didn't really need protection? Was there a light bulb moment? Was there a Eureka moment? Was someone that gave you some hints and tips and stories? How did that work?
Really, I think looking back, my uncle had cancer, and he must have had one of the first ever critical illness policies available, because it was a long time ago and they had their mortgage paid. So I grew up with the idea that everyone has it and it's quite normal. And as I say, talking to people who have all these debts, yes, they've got savings, they've got a lifestyle they want to protect, then I've always believed in it. And I've certainly had it from I've had it since we had a mortgage, and I think I was about 25 then.
Yeah, so you've got that inherent belief from that, which means you find it quite easy to talk to them about it.
Yes.
So say I'm an advisor, person who owns their own firm, I'm watching this, and I've got some advisors that work for me, and I will install that belief in them. How do you do that with your advisor team?
Well, we look at the claim stories, and we talk about all these situations. And in fact, I did another policy for a partner, a St James Place partner, and his family had moved house. And the reason we do it and they refer to us is because they could do it. but it's just time. It takes so long. And we're even doing their own policies because he said to me, I'm so busy, I just never got time. I've moved house, I need to change it. Unfortunately, his wife was diagnosed with cancer not long after, in fact, 5 days after the policy started. That was my earliest ever claim. So use these claims and we talk and we do a lot of blogs. We go out. We have a key account managers within our team who go out to all the partners and give them these stories and give them the stats and explain, how it works and what would the situation be if they didn't at least talk about it.
There's a variety of methods. It's the social bit, it's the emails, it's the verbalization of it, it's the account managers to get that buy-in in particular.
And the biggest growth, certainly this year, has been the business protection.
Okay.
And I think for a lot of people that's quite new. And we've helped the partners. We've given them quite a lot of material. We wrote something. Was it the business healthcare checklist? So it's like a brochure. So if you've got a partner who's going to see someone who's got their own business or the business itself, what would happen if the shareholder died? Is there anyone who the company would suffer financially if they were ill? All the rest of it. Because business, even more so than families, don't even consider these situations.
We don't at all. We find that, and I think it's what I find really interesting. We do these podcasts, and I love it, is because you've got that business health questionnaire. We've got our business risk questionnaire. So it's almost like we're all singing from the same hymn sheet here. Like, these questionnaires work, they're tried and tested, they raise awareness of the product, so advisors can use them to really raise the need for protection even more across the industry. And when we look at the business protection space in particular, we're seeing the same, like more and more. Both consumers are becoming aware of it, but therefore more and more advisors or partners want to tap into that space as well, don't they? And
they do. It is just an education piece.
Well, yes, the customer's baby, isn't it? The business they're running, they often don't think, or how can I protect it? What the pitfalls and what that can happen. When you raise it with them and talk about what could happen and or the implications of that happening, and then you can do something about it and pay for it through the business, with the products and stuff. Most of the time it's like, yeah, okay, let's do something about it. And it's interesting, isn't it? We're seeing that grow now, particularly with some of the opportunities on the mortgage side, going down, lack of purchase, the purchase market's gone down, PTs are higher and all that type of thing. We're finding that other people and other advisors are moving into the business protection marketplace and seeking assistance and seeking, tips and things from people like yourself on the podcast today.
Provide to the partners so that they can do it themselves or we do it.
And you mentioned that time-saving element. So obviously you receive leads in via Future Proof, but also St James's Place protection planning. What would you say to an advisor out there listening? Say, for example, they're in the wealth advice space or mortgage advice space. How can they tee up a protection lead well? What would you say that they can do?
It's all about signposting. For me, the ideal referral is someone who knows they have an issue, who knows they have something they need to protect, and then leave it there and then give it to us. Because sometimes some partners do get carried away and give them all the advice. But I'm sure you're aware, each advisor, you give 10 advisors, you'll get 10 slightly different bits of advice. So I'd rather give them the advice, but I'm quite happy to work with the partners if there's something specific they want to look at.
So it's a two-way relationship then. It's absolutely, yes, tee it up well. If you need my support, I'm here for you. Or tee it up well and then just hand it over and I'll do the full amount. Yeah.
And sometimes they do come to us and say, well, what was the rationale behind this? And we're quite happy to talk it through and explain how we got to that situation.
Well, I guess the more they know, the more, if their client ever asks, they're in a position of knowledge, aren't they? And then they can keep that conversation going. But that sounds like a really slick way of being, that bit of flexibility, but there is a fundamental process there. And that's something that we see across a lot of accounts and in our protection success research is process is key.
Absolutely.
To make sure it happens every time.
And this goes back to what I say about time, because these partners can do it themselves, but it's the time. that takes. I had a partner called me the other day about a client who'd left her old job, got a new job, but she previously had loads of employee benefits. The new one has none. So it's pretty clear she needed life insurance, income protection, critical illness cover. That's straightforward. He went, she was diagnosed with lupus last year. Is that an issue? You know, well, yes, it is an issue. You know, when was she diagnosed? What are her symptoms? What are her medication? Does she have to have liver function tests? And he was like, oh, whoa, no, I'll give this to you. And then we actually have our own medical research team. So if an advisor comes across any situation where they're not sure what the terms will be, we then hand it to our medical research team. So if people are employed full time, whose job is just to ring the insurance companies and who will give the best terms.
That's incredible. And I think from a consumer duty point of view, that is like
Mm,
robust, isn't it? Because I'm going back to what you said at the start of the episode as well, that sometimes it can be a 2, 3 stage
mm,
process. So if you think of an advisor or a partner whose core purpose is, I want to be able to give wealth advice or
mm,
mortgage advice, would they really have the one want and two
mm,
time to then think, I'm going to navigate through all of that
mm,
and actually do it well enough? Because that's specialism as well. Potentially, if they're getting maybe one case every few years where lupus has come up, you can't be expected to be an expert in all of
you
the wealth mortgage space and then know exactly what to do with a very specific client type, can you?
you can't, and that's why we've had to build the trust, because when we started 5 years ago, we had no idea if we were going to get any referrals, and it has been not slow, but it's been a controlled, because we didn't want to employ too many advisors and not have enough referrals. But it has just grown, I think, 50% on top of what we did last year. Each month or every 6 weeks, we tend to be taking on a new advisor and just building the trust with these partners. And it's exactly that, because the partners, they know how the policies work, but they may not know, or certainly don't have the time to do the research, the underwriting, and even, there's a lot of talk about service levels, and about how trust forms work, the online trusts, and all the rest of it.
I think it's less than 1 in 10 legal and general policies are in trusts. Obviously, that's taken
Mm,
from a multitude of different avenues for direct,
mm,
aggregator, and advisor based referrals into us. But absolutely, if you can know that that advice is being done really well
mm.
by an expert, then that's a win-win, isn't it,
That's
for the client and the advisor, which is great.
It's a major item is the trust. If it's suitable for a policy to be put in trust, then we should do everything we can to do so. And if we don't, we go back to the partner and say it's not in trust. We give a paper trust if it has to be, and then we give to the partner to chase up.
Yeah, it sounds like you've had that measured growth. You're taking it back 5 years when you didn't know the unknown was there, wasn't it? You didn't know how it was
Ye-
going to grow. So in terms of that, if I was starting a firm up now and I was
Mm.
looking to get into the world of referrals, what key things should I be thinking of when I'm sort of engaging with new partners in that regard that might refer me business?
Okay, sorry, you mean from the advisor's point of
Yeah,
view?
well, from both really. Firstly, from the firm being referred to, so if I was
Mm.
being referred to, and then from those providing the leads.
I guess the partner needs to know that we're a safe pair of hands, that we can be trusted. And it was really nice to actually on the train over here, we have a company WhatsApp group, and an existing partner who's never referred to us before. He referred his first client last week, and and by pure fluke, that client was given to one of the new advisors from our side, because they're just given out randomly. And the partner then, once he knew the interview had taken place with us, he called the client. How did it go? Were you happy? And the client said, yeah, I was really impressed. It was very professional. I'm really happy with service. So the partner's come back. So everyone's like, that's amazing. First partner and a new advisor, and it's all gone brilliantly.
Amazing. And for the trust element for you, how important is that?
Oh, it's crucial. Our business would not work because these partners are self-employed. They may have these clients they've worked with for years. It may be in even the children of the clients. So if they give them to us, they have to know they're in a safe pair of hands. So it's crucial that we give the best service, and treat them as as if they were a family, and then can give them back to the partner.
That's the best promotion, though, isn't it? Live, real time on the WhatsApp, almost like a real time case study, is it, of success at that point? Look, come on, everyone else, refer your first case to us. Those that haven't done it yet.
As I say, we have these key account managers whose job is to encourage the partners. So they're like, "Thank you, that's amazing. We're so pleased to get this partner."
Yeah. And I guess in that partner, maybe just, maybe wouldn't have ever done protection. So actually, not only is it great from a relationship, business, commerciality point of view, but if they're now able to offer that to their customers going forward and any clients, new clients that they get, they are providing that holistic service now. So consumer duty, bringing that in again, and also just good advice.
I
Again,
know,
their
they're
clients
happy.
might refer and say, "Look, I got this great advice. Why don't you go and speak to them too?" It's ticking all the boxes, isn't
They'll
it?
talk about it, won't they?
They do.
And from a consumer duty perspective, have you seen an uptake in referrals into yourselves?
I wouldn't say particularly because of the consumer duty. I think we were growing anyway. There is, we do get quite a few, or not quite a few, but we get more and more where we're getting clients referred to us who perhaps don't have a need, but it's just they may have existing cover in place. But it's just to review that. However, I had an advisor yesterday going, "What am I supposed to do with this? They've got everything they need." I said, "Well, you do have to review it. Okay, we're not always going to win everything and we can't sell everything." But I think it's so important because before this, I remember about 5 years ago, we had a client call who was referred by the ABI, which is really weird. This poor woman had been looking for ages for some kind of insurance. She'd been to loads of advisors, couldn't get any help, called them, and for some reason they came through to us. And it turned out she was the full-time carer of her severely disabled daughter. She wanted a policy that if she's sick for any reason, that she can cover quite quickly someone to look after her daughter. There isn't anything quite what she wanted on the market. But I thought, regardless of that, okay, I may not get a sale, but let's just have a look. Let's look at her needs. Let's explain to what's available, because to me, being an advisor is giving advice and letting people have having the choice that they've got that information, they can make a decision.
And for them to feel listened to, isn't it? I bet that
Yeah.
woman really, really valued feel listened to. Because think about how intimidating the world of financial services can sometimes be when you're on the other side as a consumer. I think they assume that we're this like closed off world sometimes. So actually
Yes.
getting someone like you who just listened to her, bet that meant the world whether she took a policy or not.
Well, it turned out to be quite handy because I went through, have you got an insurance place? No, nothing. I used to have critical illness cover, expired this year. I had it for 25 years, total waste of time. Don't want that. Okay. Let's look at your health. No, I'm healthy. Oh, I did have breast cancer 2 years ago. And this went on for a minute or two. And I went, "Whoa, back up. What do you mean you had breast cancer? You had critical illness cover." She went, "Oh, it wasn't that serious." And I said, "What do you mean it wasn't that serious? What did the insurance company say?" "Oh, I didn't tell them." And I said, "You must tell them." And then she got quite defensive. "The policy's cancelled. I could get into trouble. I don't want to get into trouble." "Don't be ridiculous." I said, here's a number that I'll have for your details from your name and address, date of birth. I'm going to call you in half an hour. I want you to have called them. She did. 6 weeks later, she got £150,000. And I thought, I was the fifth person she spoke to in a year. How did she get to that stage and no one picked up?
That's your value there. That is amazing. And I've heard spoke to other advisors that have done exactly the same thing. And I think sometimes we just don't think collectively, consciously sometimes, of the value that an advisor adds. And that is it.
And it's that value of review. Because can you imagine all these customers that maybe if you didn't review or didn't speak to regularly, who've forgotten about their policies or forgotten what they can even do with it?
There's that as well. I was thinking about that because we certainly at Future Proof send out annual statements to clients because nobody knows. Even I don't know where my own policy documents are. Obviously, I'm in the business and I know what to do if it happens. Although if I was dead, it'd be a bit difficult. And it's just people don't remember what they've got.
Well, I was put on the spot the other day because I was talking about family income benefit and why I have it, even though I don't have kids. So as much as it's family income, it's actually for James or I to afford our lifestyle if any one of us passed away. And one of the advisors put me in the spot said, "So how much does yours cost a month?" And I was like, "God, I've actually got no idea." So I was like, I set it up so long ago. And I was like, "And how much is the cover for?" And I was like, I need to check. And that's like, I've got a background in financial planning, mortgage equity release, and it's because you set these things up and you don't have to think about them again until it comes to review, or hopefully nothing bad would happen, but you don't have to think about it until the worst happens or you're reviewing. So yeah, I definitely am guilty of not remembering my own my
That's-
own ones either.
So with Consumer Duty, it is a good idea to review them.
Definitely. So if you were to say, Amy, thinking about your experience as both a mortgage in the mortgage space, as an advisor, as a team leader of other advisors, what would be the one tip that you would give to other either advisors or partners in the industry when it comes to protection?
It'll sound glib, but it's to listen to the clients. And going back to my very first point about how I didn't want to join financial services, I think it's because it is such a dry subject. I mean, the exams are not my favourite, but it's ultimately, it's a people industry. You are talking to people. Just have a chat to them, find out. And there can be so many interesting people you meet and different situations. So take that time, because you may not sell something, and it may be that one moment that you don't get anything, but the next one you might. So just treat each person the same, listen to exactly what they need, and then it'll be the best outcome for them because they'll get the best policies, and for you because you'll make the money.
Yeah. Well, thank you so much. That's been so insightful, Amy. Thank you for all your honesty and really sharing your experience with us
That's
today.
amazing.
thank
Thank you
you.
so much, Amy. Absolutely brilliant. Listening
Okay.
is key, isn't it? Thank you.